The tech analyst Dan Ives joins us from Wedbush. His new note is out today. He's here at Future Proof too. The Fed set to start cutting the cycle, plus AI revolution equals bullish tech trade ahead. You convinced that trade is firmly back?
I mean, I just got back from Asia, second trip in the last 6 weeks. It's more firm. I'm actually more incrementally more bullish because of everything we're seeing in terms of chip demand, the use cases that are ultimately driving AI, and the hyperscale. I mean, to Microsoft, I believe this is actually just the next leg in Microsoft. I think numbers go up much higher for 2025, just given our view, the AI revolution, we're in the early days, and I think it's a risk-on environment for tech going into year end.
Why has the chip trade been so squirrely then?
I think concerns about ultimately is demand softening, but that's why we spend so much time in Asia. We think demand's outstripping supply 15-1, and it speaks to the bullishness, not just on Godfather of AI, Jensen, NVIDIA, but it just when you look at overall, the hyperscalers, it's Microsoft, it's Amazon, it's Google. That's the foundation. That's now what I view as the second, third, fourth derivative. That's why names like Palantir, front and center in terms of the use case names, where I think many institutions kind of put it by the side. Now it's front and center.
And you think there's enough that's not in the stocks? Because a lot of what we're talking about is known. It's expected at this point, and that's why the valuations and the prices have been bid up.
I mean, in our opinion, I believe Street's underestimating numbers across the board in tech, 15 to 20% when you look out the next 2 to 3 years. And that's really our thesis, is that as these use cases build out, you only have 3% enterprise that have actually gone down the AI path. You have $1 trillion of AI CapEx coming, and Scott, I see it feet on the ground in Asia. And that's why I get it, the bears come out of hibernation mode and, try to scare many. But I think when I look at tech, I believe this is a tech market that goes up another 15, 20% going into the next 3 to 4 months.
He's too bullish or no?
So people were saying he was too bullish last year, and here's what's happened over the last year. NVIDIA is the second best performer in the market, up 167%. People at the start of this year in January, they said, okay, now they're going to rotate away from the AI darlings. We're going to do something else. It's 8 months later. Guess what? The number one performing stock of the year is. NVIDIA is tied with Vista Corp. They're both up 136%. So at a certain point, NVIDIA can't be up 136% every single year. But this idea that we're all going to be smart enough to know when this is it, this is the top, and it's time to rotate out, it continues to fool people, and NVIDIA continues to stay bid.
I don't disagree that we're going to finish the year strong. In fact, I think the S&P can finish the year at 6,000, and it's going to be driven by tech. I think what we're going to see coming out of these rate cuts, initial rate cuts, is some of that cyclical movement. But again, I do think in the next few weeks, I am a bit cautious, and I think if the market does pull back a little bit, it's going to be an opportunity. I mean, with the Fed cutting rates now, everybody's talking about the SOM roll. How about October around the corner here, when October's been the bottom the last couple years in a row? We've ripped out of it in tech. How about the Ives rule? October.
There's only one thing anyone on earth needs to know about seasonality. No disrespect to the Stock Traders Almanac. Shout to Jeff Hirsch. All you need to know, in 50% of all years over the last 100 years, the stock market makes its high for the year in December. Yep. That's it. You could take the rest of seasonality and throw it out.
So what have you picked up, Jim? I mean, you had some great interviews last night. I know we'll play some excerpts, whether it's from Hock Tan or Renee Haas, but what's the chatter, given our endless conversation about AI? And, I would assume it's the same out there.
It's about who needs Jensen and who doesn't. I mean, if you need Jensen, you're in trouble and you're worried about allocation. And if you don't need Jensen, well, you know what? Then you have a pretty good run of the place. Hock Tan does not need Jensen. He does not need Jensen Huang. He does not need to make it so that he gets Blackwell. But David, we keep thinking about that little piece that you ran yesterday, where you had Larry Ellison talk about how he needs to get right with Jensen. That is the real subject of discussion. Oracle's resurgence from a 2% grower to something far bigger. Why? They've got it right with Jensen.
Yeah, Ellison now number 2 on the world's richest list. Dethrones Bezos, catching up to Elon Musk. Certainly Oracle up 20% in a month will help that.
You did announce Salesforce, NVIDIA, for strategic collaboration to advance AI
and I love that
innovation.
CEO that Disney too, by the way.
Okay, well that's terrific. God love you. The Salesforce and NVIDIA forged strategic collaboration to advance AI agent. So you'll be sitting down, fireside chat with Jensen.
Jensen is coming here.
Yes. Now,
And not only Jensen, my next door neighbor invented the GPU for Jensen, and he's here too. David Kirk is amazing. It's unbelievable.
Well,
their original chief scientist is here. Just serendipitously is my neighbor, and I said, "You've got to come to Dreamforce."
Well, does Jensen subscribe to the notion that Agentforce is what AI was meant to be? Does he subscribe to that?
Absolutely. I had a long talk with him about it. That this idea of agents, he's been dreaming about this. By the way, these are guys who in 2008 and 2009 invented the next way to do graphics. Right. And do you remember the first time I bought the Switch? And I called you and I said,
you were all excited about the Switch
is amazing. And I'm like, it's NVIDIA. And then who would have thought that this idea that they can do triangles better in graphics would become a way to be able to have better large language models? It's a phenomenal act of computer science. But now the reality is we're going to have much more accurate AI, lower hallucinations, because in the Salesforce platform, Jim, we're looking at all your customer touch points. We have the data and the metadata. We have all your security provisions, all your sharing models, and we're going to deliver AI at a rate and speed and quality and capability like never before.
I don't need to be pecuniary, but if you deliver on that, then we get more than a $250 stock price. Is fair enough?
Jim, as I've said to you,
so I'm small-minded. I'm a dollar sign represented by a man. I can't help myself. The people who watch
I'm about customer success.
They love them. They like $300 even more than them.
You focus on the stock. I focus on customer success.
Fair enough. That's Mark Benioff, Salesforce CEO.
All right, I hope you're all having a great day today. The S&P finished nearly flat today. NVIDIA closed the day down about 1%, and Tesla closed the day up about 0.5%. As for Tesla, we are still trading inside of the supply zone, and the next thing I would like to see is a close above $232 per share. I still think there is upside ahead for Tesla between now and October 10th, as long as the robotaxi event is not delayed again, and as long as the rest of the market can simply remain calm. Speaking of the rest of the market, we were basically flat today as the entire market waits for the Federal Reserve's interest rate decision Wednesday afternoon. Will the Fed cut by 25 or 50 basis points? That is the question. Typically, the Fed would begin a cycle of quantitative easing by cutting 25 basis points. However, many believe the Federal Reserve is behind the curve and they may need to cut by 50 basis points as the labor market is cooling and they need to act fast before things get out of control. But if the Fed cuts by 50 basis points, which would be a departure from the norm, then market participants would start to wonder what the Fed sees that we don't, and concerns about a potential recession would be revived. Regardless of whether the Fed cuts by 25 or 50, I think the most important factor at this FOMC meeting will be what the Fed says about the labor market and what they say about upcoming rate cuts. If the Fed calms labor market concerns by saying that the labor market is fine and then reaffirm that more rate cuts are coming this year and in 2025, then I think we could potentially see the market trade higher for the next week or two. However, if the Fed comes across as being more concerned than usual regarding the labor market and weakening economic conditions, then that would create a problematic situation in the short term. Now, regarding NVIDIA, we are still trading below the 50 MA on the daily time frame and above the support trend line that stretches all the way back to January of this year. As I mentioned in yesterday's video, I think we are likely to have erratic price action within a tight range until we get the Fed's interest rate decision at 2 p.m. Eastern on Wednesday. Immediately following the Fed's rate decision, NVIDIA's price action will be largely dependent on the rest of the market. Momentum on the histogram has slowed very notably on the daily time frame, which does not bode well for the short term. But at this point, it all comes down to the Federal Reserve tomorrow. That will be the determining factor as to where we go from here. So that is my short-term view on NVIDIA. Over the medium term, I am cautious on NVIDIA between now and late October/early November. There are a couple reasons why. First, attention surrounding NVIDIA and subsequently NVIDIA's share price typically moves in cycles in between earnings reports. We have already seen this happen twice this year, with NVIDIA reaching a relative low about 3 to 5 weeks prior to the company's next earnings report. Of course, patterns tend to repeat themselves, but they do not always have to. If this pattern were to repeat itself, then we could see NVIDIA reach a relative low sometime in late October/early November. On top of this, there is an election in November, and I expect this to lead to increased market volatility as we get closer to November. With these two factors in mind, I am cautious regarding NVIDIA until late October/early November. Now, please hear me well right now. If the rest of the market reacts positively following tomorrow's FOMC meeting and trades higher for a week or two, then NVIDIA will likely follow suit and trade higher as well. But even if NVIDIA were to trade higher in the short term, I personally would still be cautious until we get to late October/early November for the reasons I've mentioned. Okay, I've given you my short-term and medium-term thoughts on NVIDIA, and now let me share with you my long-term outlook. I am bullish on the long-term future of NVIDIA, and I would not be surprised if this company doubles over the next 2 years given the company's current growth trajectory and upcoming product cycles. The hyperscalers must invest invest in AI infrastructure now, or else they will be quickly outpaced by their competition. The hyperscalers have yet to show any signs of slowing their capex spending on AI. Blackwell is on the horizon and is scheduled to begin shipping in Q4. And Blackwell is an entire platform. It's not just a chip. And this opens the door to a massive revenue opportunity for NVIDIA. So in the short term, I don't know what to expect because anything could happen. But from a long-term perspective, I think NVIDIA has a very clear runway to growth ahead of it. And I think the company's brightest days are ahead. With all of that being said, I hope you all have an amazing rest of your day. And I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.